Okay, today we're digging into Uber's first quarter 2025 earnings. We'll look at how they performed financially and how the market reacted.
Yeah, there's quite a bit to unpack. We'll cover the key numbers, revenue, EPS, bookings, and see how they stack up against expectations and last year.
Right. And we'll also look at the different parts of the business, mobility, delivery, and freight, which seems to be lagging a bit.
And then their forecast for the next quarter, Q2, plus the stock reaction and what analysts are thinking.
Exactly. So if you find this kind of analysis helpful, please do take a second to like this and subscribe. It really helps us out.
Okay, so the headline number, maybe earnings per share, that was a definite beat, 83 cents.
Yeah, much better than the 50 cents analysts were predicting.
Definitely. But revenue was a slight miss, came in at $11.53 billion. The expectation was a bit higher, around $11.62 billion.
Okay, so EPS good, revenue slightly off. What about gross bookings? That's a key metric for them.
Right. Gross bookings hit $42.82 billion. Now, that's up 14% compared to last year, which is solid growth.
But I sense a but.
Well, yeah. It also missed the forecast. Analysts were hoping for closer to $43.14 billion. So again, good year over year, but slightly under expectations for the quarter itself.
Interesting mix. How did that translate to the bottom line, like net income?
That was a really positive story. Net income was $1.78 billion, which is, a massive improvement from the same time last year when they actually lost $654 million.
Wow, quite the turnaround there.
And adjusted EBITDA.
Also strong. Grew 35% year over year to $1.87 billion. And that actually beat the estimate of $1.85 billion.
Okay, so profitability metrics looking pretty good. Free cash flow.
Very healthy. $2.25 billion for the quarter.
And operationally, are more people using Uber, trips users?
Yeah, trips were up 18% year over year, hitting 3.04 billion.
That's a lot of trips.
It is. And that was driven by monthly active platform consumers, MAPCs, growing 14% to 170 million. Plus, each of those consumers took slightly more trips, about 3% more per person.
Got it. Okay, let's break down the segments. How did mobility, the ride-hailing part, do? Mobility gross bookings reached $21.18 billion. That's up 13% from last year. Solid.
And delivery, Uber Eats, and the like.
Even slightly better growth there, $20.38 billion in gross bookings, which is a 15% increase year over year.
And they mentioned Uber One members, right?
Yeah.
How much did they contribute?
Yeah, quite a bit. Apparently, Uber One members now make up 60% of all the gross bookings on Uber Eats. So that subscription is clearly driving engagement.
Makes sense. Okay, what about freight? Still the weak spot.
Seems that way, yes. Freight gross bookings actually went down by 2% compared to Q1 last year, still facing challenges in that sector.
Right. So looking ahead, Q2, what's the guidance?
They're projecting gross bookings between $45.75 billion and $47.25 billion.
And how does that compare growth-wise?
Well, on a constant currency basis, that translates to about 16% to 20% year-over-year growth.
Constant currency being the key phrase there.
Exactly. They specifically called out an expected currency headwind of about 1.5 percentage points overall, and it hits mobility even harder. They're expecting a drag of about 3 percentage points just from currency fluctuations.
Okay, something to keep an eye on. And the adjusted EBITDA forecast for Q2.
They're guiding for $2.02 billion to $2.12 billion. That would represent 29% to 35% growth compared to Q2 of last year. So continued strong profit growth expected.
Okay. Now, a big part of the Uber narrative recently is autonomous vehicles, right? AVs.
Absolutely. The CEO, Dara Khosrowshahi, called it the single greatest opportunity ahead for Uber. They're clearly betting big.
Are they seeing any traction yet? Any numbers?
They mentioned hitting an annual run rate of 1.5 million autonomous vehicle trips, which, sounds like a start.
And they highlighted that Waymo launch in Austin.
Yeah, they said it exceeded expectations. Apparently, some of the Waymo vehicles there are performing in the top 1% for trip volume in the whole city.
Interesting. So the partnership model is working in some areas.
It seems so. And they have quite a few partnerships now, don't they? Waymo, Volkswagen, Averade, May Mobility, Aurora here in the U.S.
And internationally, too.
Right. WeRide, Pony.ai, Momenta, and they actually announced 5 new AV partnerships just in the week before the earnings call. So a lot of activity.
Definitely leaning into that strategy.
Yeah.
What else strategically? Any other areas of focus?
They mentioned focusing on expanding more into suburban areas and also growing non-restaurant delivery categories, groceries, retail, that sort of thing.
Makes sense. Broadening the base. And there's an acquisition, too.
Yes, a significant one in Turkey. They're buying an 85% controlling stake in a company called called trendy Olgo, costing about $700 million.
Why Turkey?
They see it as a really big, untapped market for delivery services, so it fits their international expansion goals.
Got it. Anything changing internally at Uber?
A couple of things. A return to office policy, 3 days a week now. And they've increased the time needed to qualify for a sabbatical. It used to be 5 years. Now it's 8 years of tenure.
Okay. So with all this, the EPS beat, strong profit growth, AV progress, how did the market react? Because the stock actually dropped, didn't it?
It did, yeah. Pre-market, it slid around 4% to 6%, which was a bit surprising given the earnings beat.
So why the drop? Was it the revenue and bookings miss?
That seems to be the main reason analysts pointed to. Those slight misses on the top line, revenue and gross bookings, seem to outweigh the EPS beat in investors' eyes.
And the Q2 outlook maybe wasn't strong enough?
Possibly. It was seen as pretty much in line with expectations, maybe not the significant beat some were hoping for, especially given how much the stock had run up previously.
Right. Expectations management. What are analysts saying long-term? Price targets.
Well, as of early May, the 12-month targets ranged quite a bit, from a low of $80 to a high of $115. The average was around $89.45.
And where was the stock trading around that?
Around $85, $86, so the average target still implied some potential upside.
And the general sentiment, still bullish.
Mostly, yeah. Lots of buy and strong buy ratings over the last few months, although they did note a slight decrease in the number of buy ratings specifically in May, maybe a little caution creeping in.
And we should also probably mention that FTC lawsuit, shouldn't we?
Oh, right. Yeah, that's hanging out there. The Federal Trade Commission is suing them over alleged deceptive billing and cancellation practices related to the Uber One subscription.
So that adds a layer of regulatory risk to consider.
Definitely. It's part of the picture.
Okay, so wrapping this up, it feels like a story of contrasts. Strong profitability, good progress on future bets like AVs.
But the market is really sensitive to that top-line growth, isn't it? Revenue and bookings misses, even slight ones, seem to matter a lot right now.
Yeah, especially when the stock's had a good run. Exceeding expectations on all fronts seems key to keeping the momentum going.
Exactly. So they're pushing forward with these long-term strategic plays, AVs, international growth with things like the Turkey acquisition, which makes sense for the future.
But the immediate reaction shows that investors are watching those quarterly numbers very, very closely. It's a nuanced situation.
It really is. And maybe the big question for you listeners to think about is how these AV investments will truly reshape Uber's business down the line.
Well, that covers our look at Uber's Q1. Thanks for joining us.
And remember, if you found this valuable, please hit that like button and subscribe for more discussions like this.